everyone, it's Trend Trader here. Welcome to our latest market analysis. This video is a bit late. Following last week market carnage, we didn't think that we will see some trading opportunities in the market. But then again, now some charts are starting to show interesting patterns that you're interested on. And we started posting charts on our social media platforms. As you can see, we shared this. We have our Twitter account. You can check it out there. We have posted or tweeted some charts that we were interested on. We tweeted this on Monday. So if you do follow us on our Twitter account, you can see a lot of the analysis that we do, just in case we don't have a video uploaded yet. So you can check out our Twitter handle. It's at Trend Trader JSE. Then you will see with our logo there. And then if you scroll there on the account, you will see some of the charts that we posted since on Monday. So back to the order of this video. So again, it's our market analysis. We start it with a risk disclaimer to say that everything that is shared on this platform is not to be used as an investment advice. In case you happen to use the material that we present here, Trend Trader will not be liable or responsible for any profit or losses that result from the use of this material. So yeah, I think that now you are familiar with that. So let's look at the charts and see what we're looking to add into our position this week and how we're going to play this market from this week moving forward. So previously we had a video that we published. On this video we analyzed Adapt IT. So we saw that Adapt IT was giving us a buy signal. So we did miss that first signal that we got there. So now last week there was a bit of a retracement on Adapt IT. So following that retracement, let's see if we can get this. So there was a retracement last week, and then it found support on the 200-day exponential moving average, and then on Monday we took a buy. From this we are anticipating that the market is going to continue to trade higher. From there, also something to note is that there is this exponential moving average cross the 50-day moving average, might cross the 200-day exponential moving average. So some people consider this as a long signal, but for us we only bought when we saw that bounce. But if that exponential moving average cross, it might propel the share price a bit higher. And just as a side note, we have now reached at least 100 YouTube subscribers. So thank you to everyone who has already subscribed. And for those who have not yet subscribed, we'd like to remind you that now it's the time to click the subscribe button and click the bell icon. And also, if you like the material that you present here, just give it a thumbs up so that our videos can reach more people. Thank you. So now back to Adapt IT. As we mentioned that we already have a position that we took on Monday from this following the bounce on the 200-day exponential moving average. So if that cross does happen, it will help to propel the price high. There was a release of result a couple of weeks ago. If you recall, I think they said that they've reduced debt. We can't really remember if they said they'll pay dividend, but we won't be surprised if they don't pay dividends, because a lot of these companies that have been trending lower for quite some time have been struggling to generate enough revenue so that they can make profit and pay some dividends to shareholders. So we're not expecting any dividend from this company, at least in the next 6 months. At this moment, we're just holding for the price action. We think that the price action will work very well and the stock price is going to appreciate. And then the second stock that we're looking at is Blue Labels Telecoms. Okay, let me remove this thing. The other stock that we're looking at is Blue Labels Telecoms. We have had this in the video. I think we uploaded that video somewhere in August. We've been holding Blue Label's Telecom since then. It's been trading nicely above the 200-day moving average, and it also has a support from the 50-day moving average, but then started to consolidate. So last week it touched the 50-day exponential moving average. What you're expecting to see here is a bounce that will take it to see trading higher. We don't think that it will trade below the 50-day exponential moving average, but then if it does go below the 50-day moving average, we expect that it will find support on the 200-day moving average and then continue to trade higher. But then again, the worst case scenario is that it trades to the 200-day moving average, it does not find support, and then it trades lower. But we're not expecting that to happen anytime soon, given that if the price is trading above the 200-day moving average, it's more likely to sustain that move, or if it trades below the 200-day moving average, it can sustain that move for a very long time. So we still have our long position with Blue Label Telecoms, and if it does find support at the 50-day moving average, we will then add on our existing position so that we have a bigger position. We have previously mentioned Capitec. We said that we're looking at Capitec. We had the buy signal when the stock crossed the 200-day exponential moving average. So everyone who bought around that time, it was trading at 1,000 Rand or so. So now it's trading at 1,200. So everyone who took their position has made at least about 108 Rand per share profit from this stock. And then this week, this very particular stock, the 50-day moving average, crossed the 200-day moving average. As you can see that it was starting to show a bit of retracement. So we're not saying that that move went up because of that exponential moving average cross. Remember that there are many factors that can affect the share price performance, and there are different price action. As we noted that last week, there was a bit of some fire in the stock market, but it seems like everything now it's a bit calm. We're starting to see normal volatility compared to the high volatility that we experienced last week. So now the stock is still trading higher. As we mentioned in the previous video, the stock has traded up until 1.4 something. I'm not sure if it did reach 1,500 per share, but 1,500 per share is still on the cards. We are monitoring this position to see how far it will go. Because of the global carnage, we've noted that there is a resurgence of COVID-19 in multiple countries. Europe in particular, they've started to lock down some parts of Europe, like UK is on lockdown, and other countries, and also the US keep on reporting large number of infections. I think the last statement we saw was that they had 90,000 new cases that were reported in a day. So we expect that if there is a resurgence in some countries, they will keep on shutting down the countries, meaning that global economies might be depressed. And for that reason, we also see this weakness with Signia. As Signia last week, it came back to retest the 200-day moving average. So now we are monitoring this position. We still have Signia ETF on our tax-free account. We bought Signia when it was trading at 32 Rand around April. So we've been holding that because this is in our tax-free account and it's an ETF. It's not something that keeps us awake at night. We're still holding this position, but if it goes below the 200-day moving average, then we will exit this position. But for now, we don't know how the US elections, the outcome, how it will affect the US market, and also globally, what are other issues that can affect the global economies. So for now, we are monitoring this position. We see that so far, it's sitting nicely at the 200-day exponential moving average, which is an area of value. So what will happen is that we might add into this position anticipating that it will trade higher, but we'll wait for confirmation. We don't predict that how it's going to trade. If it finds support and trade higher, we will add on our existing position. Otherwise, if it trades lower, then we will exit our position and keep the profit that we've already made there. So whenever you make money, it's better to keep it than to hope that you will keep it, because if you lose it, then you would have lost it for good. So we also mentioned this Dell group that was in the last week's market analysis. We mentioned that this Dell is coming to test the 200-day exponential moving average. We mentioned that if it trades above and close above the 200-day moving average, we will buy this stock. So because of last week market movement, it started to retrace a bit, forming something that looks like a bullish flag, and then it broke out of that bullish flag. So yesterday it closed above 86 Rand 55 cents per share, and then it closed above the 200-day exponential moving average. So that is our buy signal. We will be adding this Dell group into our portfolio. So there are many ways that this trade can work. As you can see, we anticipate some bit of resistance around this level, 101 Rand to 107 Rand. So we don't know how that will play out, but if that move is sustained, we think that we will see the stock going up as much as trading all the way up to 130 Rand per share, or just trading in this erratic region. So now, because the stop loss is going to be a bit lower, just around 8 Rand per share, so we think that it offers us a good risk to reward ratio. So it will be worthwhile to take this trade at this very particular moment. So yeah, we are looking to trade this day as well. Right, okay. So yeah, we will be trading. Then our entry level is going to be around here, 86 Rand per share, and then our stop loss is going to be somewhere below 8 Rand per share, expecting it to trade all the way to 101 Rand. And if it breaks above that level, we expect it to continue to trade all the way up to 108 Rand per share. Now we see we have DRD Gold. We've been talking about this stock a lot in the past weeks. As you can see, it was trading nicely above the 50-day moving average. Then it started to consolidate, retrace, test the 50-day moving average, even went as far as closing below it. And then it's been sandwiched between the 200-day moving average and the 50-day. So now it's been bouncing in there, up and up. So now we don't know what's the story with gold, but now what you can say is that you can see that the 50-day moving average is starting to bend downwards, and also the 200-day moving average is starting to be flat. So now, as you can see, it's still sandwiched between the two moving averages. What we want to see is the stock reaching the 50-day moving average and breaking out of it and trading higher. Otherwise, it will find resistance here, come back and play some tennis ball between these two moving averages until it breaks into certain direction. But one thing that you should be aware of, once the 200-day moving average starts to flatten and not rise as we've seen previously, once it flattens, it shows that there's weakness in that stock. So that stock is more likely to break below the 200-day moving average. And if it does break below the 200-day moving average, then that is bad news. It's time to cover if you already have a position. If you don't have a position, then there's no need to buy anything that is trading below the 200-day moving average. It's just a disaster. A lot of horrible things happen below 200-day moving average. So now we're just monitoring this to see exactly where it's going to move, because at this moment, it's difficult to say what moves gold. There's politics, there's COVID-19 that is happening. You don't know what used to be safe haven. Maybe it's no longer a safe haven anymore. And then we take a look at Ray and Robert. We also mentioned in the past 2 weeks that it seems like there is a stock rotation. The construction sector is finding a bit of strength. So Murray and Robert did break above the 200-day moving average. Then it consolidated a bit. And then now we see if it will retest the 200-day moving average and find support there and continue to trade higher. Also, you must note that there is this confluence here, the 50-day moving average going to cross the 200. So we're not predicting it, we're just expecting it to happen. If it happens, it will happen. If it doesn't happen, it doesn't happen. We're not saying that it will definitely happen. So we saw that some other construction companies or companies that are trading below 10 rands, there've been a lot of buyings like measures and acquisitions. So we don't know if Murray and Robert also has an offer somewhere. Probably that could be another thing that is driving the stock, but we want to see if the stock is surviving on its own because it's finding more business to participate on. As we are patriotic South Africans, we want to see the South African economy gaining strength so that a lot of people can get jobs. So we hope that something is cooking, something nice is cooking there with Murray and Robert, which drives this stock price to trade above the 200-day moving average. But as it is at this very moment, it's either you wait to see if the stock come back to retest the 200-day moving average, which would be somewhere around 7 rand per share. And then that will give you a nice entry level because the stop loss will just be 1.58 ATR below that level. Otherwise, you can wait for the stock to trade above 8.90, which will be a confirmation of a move upwards. Then you can buy there and also set your stop loss somewhere near the 200-day moving average. That will give you a favorable risk to reward ratio. Then let's go to Pepco. We mentioned Pepco last week that it was about to trade above the 200-day moving average, of which it did, but it lasted a short moment, then it went below the 200-day moving average, but luckily it stayed above the 50-day moving average. So that's another sign of strength that there are still some buyers of this stock. So now the stock is back near the 200-day moving average, currently trading at 12.54 rand. So we're also going to add this into our portfolio because we missed the opportunity to add it last week. So we will be adding this. In our previous video, we noted that there could be a cyclical change in the retail sector and the banking sector. So it seems like some moves in the retail or in the banking sector are sustained. So we are monitoring that. It's possible that the resources sector is getting exhausted. As you can see, the 200-day moving average is flattening in some of the resources stocks, and a lot of retail companies are breaking above the 200-day moving average. But time will tell if indeed there is a change in sector. And then one stock that caught our interest, people have been talking about it. Okay, no, this is TFG. We've had TFG for quite some time. It's been trading above the 200-day moving average. It's still holding that position nicely. And last week it did retrace a lot, but our stop level wasn't hit, as you can see. It did trade lower, but it didn't reach our stop level. So now it's back at break even. It found support at the 50-day moving average. So now it's back above the 200-day moving average. Also, it's worth noting that there is that cross that might happen between the 50-day and the 200-day moving average, which can be interpreted as a bullish signal. So from there, we are expecting a move. As we mentioned previously that if the long move is sustained, we're expecting the stock to trade at least up to 120 rand per share. Then from there, probably there will be a bit of consolidation and maybe some retracement. But if that move is sustained, we would like to see the stock trading back above 160, 170 region and so on. But for now, we are keeping that position. We are monitoring what is happening there. So for as long as it's trading above the green line, we will hold it. Otherwise, if it trades below, we will exit our position. So now this is the stock that has found our interest. This is Telkom Group. As you can see, it's been trading lower below the 200-day moving average, and it's been finding resistance on the 50-day moving average for quite some time. Then in June this year, it tried to break above, and then it was sandwiched between the 50 and the 200-day. But the upward move was not sustained because it found resistance at the 200-day moving average. Then it started to trade lower again, but this lower is higher than the previous low. This recent low is higher than this. So what you see is a series of higher lows. So higher lows are an indicative of a change in trend. So now we are waiting for the stock to trade above the 200 moving average, which would be a confirmation of a change in trend. So at this moment, Telkom Group is on our watch list. We don't have a position yet. We want to see if it will indeed break above. But as you can see, the move yesterday was sustained by a large volume. Well, we do believe in volume. We check the volume if there is a breakout. Whenever there's a breakout, we want to see large volume that is sustaining that move. Otherwise, it's a fake move. Yeah, so we want to see more than normal. As you can see, well, it's difficult to see, but we have a trend line in this volume indicator, and yesterday volume is above the 14-day average volume, the stock that has been trending. So we are happy to see that. Now we're just waiting for confirmation. For us, it's important to wait for confirmation. We don't mind buying at a premium for as long as that we can see that the stock is indeed moving as we anticipated. We don't predict where the stock is going to go. We just anticipated that it might go to a certain direction. Then we wait and see. If it does go into that certain direction, then we enter. It's just a small price to pay, but we prefer to have confirmation. Otherwise, you'll be going in and out of the market because you keep on predicting. So that's it for this week. Again, don't forget to subscribe and click on the bell icon. And also, if you like this video, click the thumbs up so that many people can see the videos that we upload. So that's it for this week. As we mentioned, we're looking to buy. We already have a position on Adapt IT, Blue Label Telecoms. Capitec is a good buy at this moment. We are monitoring the World ETF. Okay, ours is Signia, but there's also Satrix, World ETF, and other ETF providers. But ours that we have in our position is the one from Signia. Yes, we are aware that it has a higher total expense ratio, but the Signia one does pay distributions, if you recall, at least once per year. The rest of the other service providers or ETF providers don't pay distributions on their world ETFs. So we like to receive money every now and then. And we are looking to take a position in distal groups. Distal group, as we mentioned, that it looks interesting with a couple of resistance ahead that we have noted. We're also monitoring DRD, what's happening there with the gold stocks and with all the mineral or the resources stocks, what is happening in there. And we are looking to add more Pepco. We've noted that Murray and Robert is showing signs of life in the construction sector, and we're still holding our TFG position, and we are monitoring the Telkom group. So we'll see how this will work. And for those Impala shareholders, yesterday we received a communication from EasyEquities about the odd lot. So for us, we bought our latest buy on Impala. It's around 180 something rand per share, and the lot offer is around 172 or 177. I don't remember the exact number. So we will be opting to keep our shares because the offer is below from our entry level. But if you bought way below 170, then I guess it would be a nice profit to pocket. But for us, we still expect the company to do well in the future. So we won't be taking the odd lot. We'll just keep our shares and probably add there depending on how the price action work. So that's it for this week. Once again, thank you for taking your time to watch our channel, to follow our analysis. We hope that it does help you to grow as traders and investors. See you on our next analysis. Thank you.